Running a home service business is hard. So how is it that some people make it look so easy? Well, we'll tell you. This is the Freedom Blueprint Podcast. It's always good to hear the wins that successful contractors have. But have you ever thought that the best advice would be to hear about the speed bumps they encountered, the mistakes they've made along the way? We're going to talk about the good, the bad, and the ugly. We want you to be successful and avoid the mistakes others have made. Let's get this party started. Welcome to the Freedom Blueprint Podcast. Now your host, Justin Deese.
Welcome back to another episode of Freedom Blueprint Podcast. I'm your host, Justin Deese, and today I have not one, but two special guests hanging out with me today. The first is my amazing wife and the virtual CFO, Kristen.
What's up?
Did I say that right? Special co-host?
I'm your guest co-host.
Guest co-host. Always excited to have you on. And we have Cyndi Warren from Warren Averitt CPA firm, which I will say has been our CPA firm for almost 10 years, if not more now.
A lot of years, yes.
A lot of years. So Cyndi, welcome to the show.
Thank you. Thank you so much. Time flies, doesn't it?
Oh, man, I know.
I know.
We keep her busy.
We keep Cyndi really busy. So we are, like, I don't think any of the other listeners are like this. I think this is just an us thing. But we do something and then say, Cyndi, just so you know, this is what we did. Instead of saying, hey, Cyndi, we're thinking about doing this thing. What should we do?
Yeah, you guys are the only ones. No one else does that.
Yeah. I'm like, Cyndi, can we write this boat off? This feels like a boat. It feels like a business expense.
We would be like, hey, we've been paying for this boat out of the business, FYI.
We probably shouldn't say that on a recorded line. Anyways,
Yeah.
So we asked Cyndi to come on today because obviously here recently there was the new big beautiful bill that went out, and you can probably correct me on the amount of pages on this, but it was something like 1,000 pages, right? And so a lot of it obviously has to do with businesses, and there's some things around rebates for the HVAC people that listen that obviously are going away or not going away or changing. But we really wanted to have Cyndi come on here and just talk about it a little bit and get a little bit of insight for what to watch out for or what to prepare for or things to pay attention to. So, and who better?
Yeah.
Well, thanks. I appreciate you guys giving me the opportunity to be here. You know, this is one of the fastest moving bills that I can ever remember. In fact, I did some research to try to figure out if it was the fastest because like it usually just seems to drag on and on. This bill was originally passed by the House in May 22nd of this year. It went to the Senate. The Senate kicked it back on July 2nd. The House passed it again on July 3rd, and the President signed it on July 4th. So less than 2 months from the time that the House voted on it, it was enacted into law. And what I found was it's the fastest tax bill that I can ever remember happening. And there are a lot of provisions from the 2017, it's called the Tax Cuts and Job Act, that we affectionately refer to a lot of times as the Trump tax cuts. So a lot of this bill is extending those. Many of those provisions have already expired or were in the process of being phased out, or they expire at the end of this year. So a lot of this bill really was beneficial for us to get some of those previous tax cuts extended, reenacted, and sometimes in slight modifications of those for both businesses and personal taxes.
Not to totally turn this into a political conversation because I don't want to really go down that road, but who's to say that in a couple of years when this administration changes again that they're not all going to get removed or phased out or whatever? And that might not even be something that we can answer at this moment.
I mean, it could, but it's kind of part of the whole House and Senate. And
yeah, that's what, that is the caveat. a lot of the times the bill says these changes were made permanent or these cuts were made permanent, and they're permanent until they change. So they're permanent until there's another piece of legislation that changes them. And actually, if you think about it, a lot of times what happens when we get a new bill, particularly that has to do with the budget, there are a lot of clarifications. So there will be some follow-ups to correct some things. I wouldn't be surprised if there's not a corrections bill that comes on on the heels of this, just because it was done so quickly, and there are going to be some things that they no doubt have to come back and clarify or change or fix.
So as a home service business owner, what are like the main pieces that either changed or got extended that would affect us as in this industry?
Yeah, so I think one of the biggest things, many businesses now, small businesses, are flow-through entities. So they're taxed as S corporations or partnerships. And so there has been a provision since the 2017 Act called the Qualified Business Income Deduction, which basically says, in most cases, with some exceptions, you can take 20% of the income from your business activity as a deduction against that activity. So what that does, instead of lowering your tax rate, it's just a deduction that in effect lowers your taxable income. And that is one of those provisions that would have been a huge hit to small businesses had it not gotten extended. So it actually went out, it expired at the end of 24. So 2025, we weren't even guaranteed that. It got changed a little bit. There is a minimum deduction of like $400 for most people, but it is literally can be hundreds of thousands of dollars of deduction depending on your taxable income from your business activity. So that's a big one. The other big one that I think is huge for small businesses is bonus depreciation was reinstated. So bonus depreciation says that doesn't matter if you have income from the activity or a loss from the activity. If you place equipment in service during the year, you can expense 100% of that in the year that you place it in service rather than depreciating it over its useful life, which is how we normally, depreciate assets.
Is that the Section 179, what we would have referred to that in the past as Section 179, or is it different than that?
It's different. So bonus depreciation will allow you to take a loss. It can create or increase a loss from your business activity. Section 179 was also, quote, made permanent with a higher level of expensing, but Section 179 does not allow you to create or increase a loss. So you can take Section 179 on assets down to zero, but you can't create a loss with that. So in most cases, it would be beneficial to take the bonus depreciation. The caveat on bonus depreciation is that once you elect to take bonus, you have to take bonus for all assets in that class category. So 5-year assets, for instance, if you take bonus on one asset, you have to take it on all of them. And if you don't want to decrease your income that much, say you want your financials to look a little bit better, or you want to save some depreciation for a future year when you think you're going to be in a higher income bracket, you might choose Section 179 and just pick and choose which assets you want to take that immediate expense on. For Section 179, it does not.
Okay, so if I buy a van, and let's say I buy it right now, and my year's okay, but I'm like, I'm gonna crush it next year. And I'm going to crush it the year after, then it might make sense to take like 50%, or does it have to be all or nothing when you deduct?
For Section 179, you can take as much as you want. So let's say your van cost $100,000 and you wanted to Section 179 25, you could. Bonus, you take the whole thing.
Yeah. Okay, and so here's one thing that we learned. I'm going to say, well, we learned it. We learned it. It's a lesson we learned. So we went through and Section 179, a whole bunch of stuff throughout the years in order to, in an attempt to lower previous year's tax payments that we had to make. And then we sold our business and we sold all of the assets that had a book value basically of $0. And because we sold the business, we sold them for something on the market value and ended up having to pay a gain on the difference between the book value and the market value of the item. So, Cyndi, had we have thought about that a little bit better, like forward thinking, is there any kind of like it's a good idea to 179 if you don't plan to sell in a certain period of time, or is there anything that you should take into consideration that we maybe should have been a little bit more foresighted on that we weren't in order to try to avoid
Yeah,
any of that?
you are always going to have to recapture your depreciation when there's a gain. So to the extent that the market value that you're paid for an asset exceeds the book value for tax purposes, you're always going to pay tax on that gain. So really that wouldn't have mattered. You got your deduction ahead of time. So when you think about the time value of money, I still think you made the right decision by taking that deduction early on.
Okay, so I've got another question. So a lot of the new bill, I'm hearing about the overtime and the tips, which obviously tips don't play a huge factor in our industry, but overtime plays a huge factor. So how does that affect the business owner and the employee?
I mean, the business owner, there's going to be a little bit more reporting requirements for you because you are going to have to break out the overtime on the employee's W-2 because that is the only way they are going to be able to take the deduction for the overtime is if it's shown separately on their W-2. So you'll see some changes to the W-2 format for 2025 so that we can allow the employee to have that information to take the deduction. Here's one thing I don't know. It is a maximum deduction of $25,000 for overtime. If you've paid an employee more than $25,000, I don't know if that's capped on that reporting process for their W-2 or if you just show up to $25,000. But for the business owner, it really doesn't mean anything more than a little bit more record keeping and reporting requirements.
But so that's a good benefit though to the employee, but you're saying where they're going to capture the gain on that is going to be at the end of the year when they do their taxes.
Mm-hmm.
Like it won't affect their check on a weekly basis.
Correct.
Right. Okay. When does that start rolling out? The end of the year?
This year, effective for 2025.
Okay.
So all overtime they earned even before July 4th, as long as it was in 2025, do we know if that technically will?
It is for tax years after 12/31/24. So I think it is for all of 2025. And obviously, if you're paying someone time and a half, they're only going to get the deduction on that half, just the overtime piece.
That's true.
But still, that seems like that's going to be come the end of the year when it's tax season for people that work as an hourly wage that do have overtime. That could add up to be a pretty significant amount. That's pretty cool.
Yeah, and there are some phase outs. So, if people are over the income threshold, they are not going to be able to take advantage of that. The phase outs are $150,000 for an individual or $300 on a joint return. So, if you happen to be an hourly worker whose spouse is a high earner as well, you might not get the advantage of that unless you file separately, which isn't always the best overall advantage either.
Mm-hmm.
So what about bonuses? So if you're giving employee bonuses, does that operate the same as the overtime or is it separate?
Yeah, the bonus wouldn't be considered overtime.
Okay.
So one of the things that we hear a lot from bonus standpoint is because in this industry, there's a lot of people that pay commission on performance, so performance-based pay, and then there's a lot of people who pay bonuses if they hit certain goals. So if they hit a certain revenue goal or they have a certain whatever, they get a bonus. And there's a lot of back and forth about whether or not that bonus amount needs to be factored into the overtime rate. And it definitely seems like there's a lot of circumstances around it. I don't think it has anything to do with the new bill that came out, but was there any language in it about bonuses and calculating the overtime rate or anything like that in it that you saw?
I haven't seen anything. No, I have not read all 1,000 pages of the bill either.
Oh my gosh, could you imagine how boring that would be to read all 1,000
No,
pages
I
of it?
can't.
I could not.
And I want to say probably no one else read all 1,000 pages of it either.
I'm not going to lie. I would take it. I would upload it in ChatGTP, and I would just ask it questions as I needed it. That would be my
your go-to.
That would be my read it.
Yeah, that's probably what happened.
So I have some questions on the clean energy bill side of it, but I don't want to shift gears if you're
good.
Still have more on that. So obviously a lot of HVAC companies were using some of the credits. We didn't get to take too much of advantage of that here in Florida as some of the other states did, but obviously that's all going to go away at the end of the year as well, right?
Yeah, those are depending on what the credits are. Some of them expire at the end of this year. Some of them, I think, June 30th of next year. The green building deduction, which you guys people in your industry might be involved with in terms of the envelope of the business, that is expiring after, I think, the second or the third quarter of 2026. So then that's really how a lot of these provisions are being paid for, taking out some of those credits and not giving those anymore is part of the revenue raise to fund these cuts. Or not cuts, but extensions.
Yeah. Well, I know in the HVAC industry, there's just a lot of people that are upset about that, but
it definitely depends on what state you're in.
Well, it does, but at the end of the day, everybody's losing it. So it's not like you're going to lose customers because you can't offer it. But nobody can offer it. So figure out how to do better at selling. Sell on how
more.
awesome your service is.
Okay. Was there any other pieces of it that you saw that would change, affect anything that we as business owners need to be aware of that you saw?
Yeah, I think there are a couple of other things that I would want people to be aware of. One of them is there has been a limitation on the amount of interest expense that a business can deduct. So particularly if you are a fairly young business, or if you've done a reasonably sizable renovation or expansion that you have financed, and you may be not really recouping that yet in terms of revenue, and so your income is a little bit lower. There have been some limitations on the amount of that interest expense that you can deduct in the current year. You don't necessarily lose it. It gets carried forward until you have enough income to deduct it. They did relax those rules a little bit. There is still a limitation on the amount of interest that you can deduct, but they did relax that a little bit in the bill. So that's something to look for. Also, there have been some provisions if you have research and development expenditures. And really, research and development is pretty broad. You might think of it as really just technology kind of stuff, but it isn't. It's a new process even. Would qualify as research and development. Those have been required to be capitalized and amortized over a 5-year period for the past several years. That was reversed. So starting in 2025, we are back to being able to fully expense those R&D expenses. So that could be a really big thing in some cases.
I know what you're about to ask.
Okay.
Go ahead.
Well, my question was, so thinking of a home service business, what is an example of something that we could call R&D? Because in my head, I'm thinking like the question about the apprentice. Like if you have an apprentice, technically, isn't that a new
I was thinking more along the lines of if
R&D?
you were HVAC and now you want to add plumbing, would
Oh,
adding an arm like that was different but similar be considered R&D to, like, does that qualify under the
I don't think
definition?
so. I think R&D is going to be something more along the lines of streamlining a process. So you used to do this manually, but now you're developing a way to automate a certain process or something like that. Or you are investing in, you're building a robot that is going to be able to do some part of the work that had previously been done manually before, those kinds of things. We see that maybe more in like the engineering field, construction sometimes, but engineering is pretty big. But I think there could be some situations, in your industry where that would apply as well.
I'm building a robot.
You better start
And how
R&D in that thing.
how much of that can you write off? All of it?
Yes, unless it is foreign, you can't write off foreign R&D. That still
Okay.
has to be capitalized and amortized. So,
Now I
so
was
you
going to
got
build it in my backyard
there we go. There we
because
go.
it doesn't have to function, right? Just
Eventually, it will have to.
so.
Function,
But I am very curious from a plumbing. Is there something easy that people actually do on a daily basis that
But
they wouldn't even think would qualify
But
for
they're
this?
probably already expensing it though. So the point
Okay.
is that in the before you would have had to depreciate R&D, but if our business doesn't even know they're doing R&D, they're expensing it. They wouldn't even
Gotcha.
know to be depreciating in the
Gotcha.
first
Well,
place.
and the one thing that you might be missing, and this would only really be beneficial if your R&D expenses were significant, but you also you have to go through a little bit of a complicated calculation, but there is an R&D credit. So if you think about a credit as a direct dollar for dollar offset to your tax, whereas a deduction, you only get the benefit of the tax rate times the deduction. So where you would want to make sure that you identify things as true R&D expenses is if they were significant enough to go through that study and have the credit.
I don't
Thought I
know.
found a loophole.
I know. I thought you were onto something. I don't know.
And
The
then
wheels are spinning.
I see them. I see them from here. The other thing that is not so great in the bill is that after 2025, employer provided meals are no longer deductible. So unless you are on a ship or a vessel of some type or an oil drilling rig, those meals are not going to be deductible going forward.
So I remember, if I remember correctly, a couple years ago, business meals and entertainment there was a higher deduction on them. And then I feel like that lowered. And then, so are all meals in general now, no more food?
After 2025.
Yeah. Okay.
Yeah.
All right. So this actually is going to come up a lot. It definitely in conversations, because what'll happen is a company will have a meeting with like a full company meeting in the morning, and they'll go to Whataburger and they'll buy everybody burritos. And so the question comes, is it a meeting expense or a meal expense? And is that a company provided meal? Now that will be something that they're not allowed to take as a deduction anymore.
Yeah. So I think in that specific example, that definitely would be a company provided meal and it would fall under this provision. I, I don't know, if I think about how could we get around that and really call that a meeting expense is wherever you're having your meeting. Let's just say you're having your meeting at a hotel, and instead of going and having a separate meal brought in or catered or whatever, if you can find a way to have all of that on an invoice, not broken out, maybe that's going to be the way. But I just think about like our firm during busy season, we bring meals in 3 or 4 times a week just because people want to keep working. And, it's a nice thing to do for people because they're, working a lot of hours during tax season and they don't want to go out. And it also, it's easy, and selfishly they get right back to work, and so it's going to be interesting, I think, because those are some real life examples that of not just, taking your general manager to lunch at, a nice restaurant and plopping down your credit card and calling that a business meal. I mean, there are legitimately, things. I'm not saying that's not legitimate, but there are really a lot of situations where it is for a group of people, not just picking and choosing a lunch here or a lunch there. How am I going to get my lunch expensed every day? Oh, I'll just take one of my employees, you know.
Well, and my brain goes to Christmas parties. Like you do a Christmas party for everybody at the end of the year, then they're saying that the food for that would
Yeah.
not be.
And Christmas
I don't love
parties
that one.
Christmas parties were one of those items that were 100% deductible because they were for for the entire company. So, I don't know.
That's not going to go over very well, but okay.
Yeah, that's
But if
not
I
going to go.
start a separate business
No, that's
and
what.
that you
And you
just pay
operate
me,
it on a ship. If you start a separate business and you
you see what
operate
she
it on
said?
a
She
ship,
said
you
a
can
bigger
deduct
boat.
those meals. There you go. Back
Cindy
to the
knows my love
boat.
language. She knows my love language. She's like, you need a bigger boat.
That's why I like Cyndi. Cyndi doesn't say no, you can't. She says if you want to, this is how you have to do it. Yeah, that one's definitely going to be a big one
Yeah.
for sure.
Yeah.
Is there anything else?
I don't think, in the most of the other things. Oh, one other thing, 1099, your reporting threshold for having to issue 1099s is going to go up to $2,000 after 2025. So this year you'll still be stuck with the 600, but then starting in 2026 it'll be 2,000. So that I think that's a really good one. Yeah, and then another way they're going to pay for all of these tax breaks is through.
Did you like how she set up the bad news she's about to give us with
Hmm.
that?
This isn't bad news for you guys, but this could be bad news for some people. Um, the employee retention tax credits audits, the statute of limitations has been extended to 6 years for some of the quarters. There are some penalties against some of those providers that filed claims that might have been not quite so accurate as they should have been, and so that's another. I just throw that in there. That's another way they're not taking all the things away from us. They are really legitimately going after some things that probably should not have been done in the first place.
So we went back and forth a lot, Justin and I did, on whether or not to try to get any of the money that they were sending out to everybody. And there was a few people that I talked to, and it was a struggle for us. And it was a struggle for a lot of home services because a lot of home service businesses actually showed gains and growth during that time because our industry exploded post-COVID. And so then it felt like there was entirely too much creativity that needed to happen in order to qualify for it. And I was like, I just feel like we're just raising our hand that says, please audit us. And I don't even want to go down that road. So we ended up not doing that. But there's a lot of people that did, but we ended up not. I was just too nervous that we were opening up a can of worms that we did not want to be messing in.
Yeah, there were, this is not really on subject, but there were a couple of different ways that you could qualify. So you could qualify if you had a revenue decline, which you're saying most businesses in your industry did not, but you could also qualify if there was a partial shutdown that impacted you and you didn't have to have a revenue decline. And I think that's really where so much creativity crept into the calculations and the filings that um, it was such a fast track thing, like trying to get money out to businesses, that there wasn't a lot of parameters put in place, and things got filed and paid out so quickly before they really, started putting the brakes on things, going, whoa, this is probably not so good.
Right. We were actually watching a what's that show that we watch with the guy's voice?
Oh, American Greed.
American Greed. We were watching American Greed,
Love that
and
show.
there we're talking about one guy who was,
Oh,
I mean, millions and millions and millions and millions of dollars for different businesses that he was filing these claims for and
yeah.
getting just paid left, right, and center till they finally caught up with him and realized what was going on. It was kind of crazy, actually.
Yeah, that it is crazy. It's crazy the number of businesses. Yeah, I mean, when people just started, like just opened a business saying, okay, we're going to file all these ERTC claims for people, and they got paid. In many cases, they got paid before the businesses ever got their money.
Yeah,
Mm.
yeah, it's nuts. So, okay. Well, I'm glad
Anyway,
that we're not in that pool. I'm
no,
glad.
Yeah.
No,
no, you're
we're
not.
not worried about that one. What else?
I think that's kind of all the questions I've got.
Awesome.
Yeah, Cyndi, I appreciate you jumping on with us. I know you got a ton to do.
Yeah.
If
Tell us a little bit
yes,
about Warren Averitt and what you guys provide and who your ideal clients are that you love to work with and all that kind of stuff.
Yeah, so Warren Averitt is a regional accounting and advisory firm. We have 16 offices in Alabama, Georgia, and Florida, and we have about 800 people across the footprint of the firm. And we really go to market on an industry basis. So I think one thing that differentiates Warren Averitt is that go-to-market strategy by industry. So if you're working with me, I should have some construction experience, and then if you have financial statement needs, then we're going to bring in someone else on the financial statement and reporting side that has industry experience, rather than just saying, okay, this is your team and in Pensacola. And so the nice thing about having a footprint across the Southeast is that we have a lot of resources, and we like to put the best resources on the right bus, so to speak. So that is, I think, one thing that's different about us. Our ideal client is, small businesses up to multi-billion-dollar businesses, honestly. We do a lot of construction, we do a lot of manufacturing type work, a lot of public sector, and then we have some specialized services that really bring value too. So we do valuation services, we do transaction advisory services, employee benefits. We have a whole group that does employee benefits and compensation studies and all that kind of stuff. So really, we're not just a CPA firm, we're an advisory firm as well. And I think that's really, in a lot of cases, where the differentiator is for our firm.
Yeah, yeah. We got connected with Warren Averitt because through Susan Hill in the Atlanta
oh
branch,
yeah,
who was like, "Oh yeah, you need to. We have a branch in Pensacola. You
yep,
guys are in Pensacola.
That's
Like
right.
that's perfect."
Yeah.
It was important to me to have somebody that was a company that was big enough to be able to handle the crazy stuff that we do, but also that I could go and sit down in front of if I
yeah,
needed to. Like if I felt the need to say, Cyndi, we got to talk, and we could like come and sit down in front of you in your office and be able to do that. That was important to me rather than having somebody across the country who, different time zones and the whole thing.
Yeah, I think that's one of the things that we say. We have the resources, of a big firm, because we do. There are a lot of people, and that allows us to specialize, but we're also small enough that, relationships are a big thing to us as well.
Very cool. Awesome. Well, thank you.
Well, so let me ask this: if somebody wanted more information on your firm and wanted to work with you guys, what's the best way for them to reach out?
They can go to our website. They could get all kinds of information, warrenaveritt.com, at our website, or they could email me at cindy.warren@warrenaveritt.com, and I can make sure that they get connected to the right person.
Yeah, so he'll put the link to the website and your email address in the show notes, so anybody can find it there.
All right.
Or you can reach out to either one of the two of us. We can get connected as well.
Yeah. Well, good deal.
Awesome.
We appreciate it, Cyndi. Thank you so much.
Thank you so much. Yes.
As always, good to see you.
You too. You guys have a great afternoon.
You too. Thank you.
Thanks. Bye.
You've been listening to the Freedom Blueprint Podcast. Information is useless if not applied. So take what you've learned and go and implement it. We hope you've enjoyed the show. If you did, make sure to like, rate, and review. We'll be back soon. But in the meantime, find us on social media at Freedom Blueprint for Home Services and hit the website at www.freedomblueprintpodcast.com. See you next time.